We're going to dive into one of the most pivotal concepts in trading, and that's understanding support and resistance. Now, you have to understand, these are not just lines that you toss on a chart. These are actual battlegrounds where buyers and sellers, they clash, and it creates these pivotal moments that could define the next market move. So it's simple. Just imagine support as a floor, and the price struggles to fall below it. So this is a level where demand for the instrument is thought to be strong enough to hold the price up. And this is where the buyers will step in. They'll see some value there. Sellers, they hesitate because they're fearing some further gains. Resistance, on the other hand, this is like a ceiling, just caps the price's rise. Now, here, supply overwhelms demand. Sellers see a peak. It's worth cashing in on that. And buyers, they just back off. They anticipate a downturn. But really, support and resistance levels often become these self-fulfilling prophecies because of the collective response of traders. When price nears support or resistance, market participants, they're going to adjust their strategies, they're going to adjust their positions, and it's just going to reinforce the significance of these levels. But sometimes the dynamic, it shifts, and these critical levels get broken. And that's just a moment that we call a breakout. Now, a genuine breakout through resistance, this can signal a shift in the market sentiment, could catapult the price to new highs, with buyers now willing to pay even more for the instrument. But you have to be aware of failed breakouts. And this is just where price breaks a level, only to reverse sharply. Now, these traps, they can catch traders off guard, can lead to a rapid reversal, especially if traders start covering their positions. But at the same time, breakouts and retests, these are common. And many people will think that breakout has failed, especially if price pulls back below the resistance level or back above support. But keep in mind, this is normal behavior. You've got profit taking for those that entered early on this move before the breakout. You also have mean reversion traders who are looking to short a strong move up or a big move down. So we want to see what happens after that retrace. Now, here's what's interesting. Once resistance broken, it can often transform into support. And it's also true for support breaking can return into resistance if price revisits. Now, this role reversal of these levels, it plays a pretty important part in your strategy development, gives you new opportunities for entries or exits. And that's generally with a breakout and a pullback. So we understand how support and resistance works. We understand why they work. But is the standard way of drawing them, which is the peak and the trough, the extremes, is that the best way? Let's take a look at a more refined approach to support and resistance. And it's the concept of zones. And traditional methods, it focuses on these precise lines and price extremes. But really, it's best to think of it in terms of a broader area or a broader zone. So don't think of support as a rigid floor, but it's an area that's a cushion, where buying pressure gradually builds. At the same time, resistance becomes a ceiling that has some give to it, where selling interest intensifies across a range of prices. This zonal approach, this lines up more closely with the reality of the market. Prices rarely respect exact levels. It has happened, but don't count on it always happening. But they often do react within a general area. So when you think of zones, we account for the market's natural ebb and flow. We can reduce a false signal for a trade, and it's going to give us a more nuanced view of potential reversals or breakouts. So here, notice how price doesn't just bounce off a single point, but it finds support across a wider zone. Each interaction, it tells a story of accumulation, hesitation, or rejection. And when you look at volume within these zones, we get a better understanding of the strength of that particular zone. Now, zone will also help filter out market noise. So what might appear as a breakout at a precise level could be just a fluctuation within a broader zone. This perspective can save you from premature entries and whipsaw that can often follow. So the key, look to place your lines inside of the extremes by looking to the left of that extreme move in price. For a price peak, that zone you're looking for will be lower than that peak. For support, look for the trough and then look for the level to the left. This takes some practice and the ability to understand the price reaction on the left of the extreme to find an appropriate level. But here's a tip. Think of a head and shoulders pattern, but we're not looking for a specific head and shoulders pattern, but just the way the pattern forms. When you adopt this mindset of zones, you are going to align your analysis a lot closer with the market behavior and the realities. So remember, support and resistance, it's not just about a line on your chart. These are areas where significant shifts in supply and demand can occur. So these levels, it's not just about drawing a line where prices bounced or reversed before. You have to understand the story of price evolution, where it hesitated, where it rallied, where it retreated. When you master support and resistance, it can absolutely transform your trading. It's going to provide clearer markers for decision making. Again, remember, these are not just lines. These reflect human psychology, they reflect market sentiment, and they reflect the ongoing narrative of supply and demand. If you understand this concept, you are going to have a powerful tool for navigating the markets.
Everything discussed here is our opinion, and it is not to be taken as investment advice because we are not your financial advisor, nor have we considered your personal situation as your fiduciary. This presentation is for your education and entertainment only. Please review NetPicks' full risk disclaimer and privacy policy.